Hey, welcome back to another video, guys. Today we are going to talk about Maple Finance, the protocol. I talked about Maple Finance before in the context of stablecoin farming. Today we are going to talk about the token Syrup, if it's worth it to invest, at which price target is it worth it to invest in it, how the protocol works, potential valuation models, and all the good stuff. So stay tuned for the video. All right, guys, let's recap real quick. What does Maple Finance actually do? Maple Finance provides over-collateralized fixed short-term loans with fixed rates for primarily blue chip crypto assets at the moment. It is highly regulated, so it is a centralized finance provider for these loans. Because of the over-collateralization aspect, it is really secure. The short-term, fixed-term rates make it really predictable. And because of this niche they're offering, they can, namely to loan to institutions and give them fixed-term rates, which is still a niche product in crypto. They can charge a niche premium, which benefits the lenders of the protocol as well. We'll talk about the numbers in a little bit. So let's look at a workflow here, how Maple Finance works. We have on the one side the KYC investor who invests at least $100,000 or essentially provides $100,000 at USDC to lend to Maple Finance. On the other hand, there are institutions who want to lend this money, and as a security, they put up collateral in mostly blue chip crypto assets such as BTC and ETH. Let's say they provide $150 worth of Bitcoin or Ethereum into the protocol, and they will get a $100 or 100 USDC loan out of that. With this money, they're going to work in markets and in the best case scenario, yield a return that is higher than the borrow rate so that they can return their borrow at a profit and with that unlock their crypto assets again. The fundamental bottleneck of this business model are actually people who are willing to lend out their stable coins. So what Maple Finance did then was saying, we are not taking on only KYC investors that are capable to invest $100,000 or more. We are also will accept USDC and USDC from DeFi users that only have a wallet and are not willing to KYC themselves. And this is via Syrup protocols. You can provide your USDC over Syrup protocol, and the USDC that you lend out there are going to be lent in these over collateralized borrows to these institutions. When the institutions paid back their loans, money will be returned plus profits to the lenders, and Maple Finance will take a small cut of the profits. So let's look specifically into how Maple Finance actually makes money. Like I said, the institutions are borrowing money at a certain rate. Let's assume here 8%. They're lending 8% USDC from Maple Finance. Maple Finance takes 1 to 2% depending on the asset and the structure of the deal on the borrows and pass the rest of the yield onto the DeFi users and the KYC lenders. What is going to happen to the 1 to 2% revenue? That the revenue will be divided into two separate buckets. The first one is the Maple Treasury. So 75% of all revenue at the moment goes into the Maple Treasury, and that is used to further grow the business, pay out salaries for the team, pay infrastructure costs, and so on. The other 25% will go back to Syrup stakers. Syrup is the native token of Maple Finance, and if you stake Syrup into the Maple protocol, the 25% of all Maple revenue will be used to buy back the token on the open market and will be redistributed to stakers. So how much is this actually? Let's have a look into the most current numbers of Maple Finance. So as we can see here in their Dune dashboard, they most recently got to $4 billion TVL. And here we can see the assets under management, and you can see that the most successful product on the lending side is Syrup USDC. It has grown from the beginning of the year of roughly 120 million Syrup USDC to over $2.7 billion, which is pretty remarkable and shows the demand for yield products on stablecoins. The most interesting number from a revenue perspective here is loans outstanding. As you can see here, we have $1.5 billion loans outstanding because and Maple takes roughly 1% on these loans outstanding, which translates into roughly last month it was $1.4 million, and this month is going to be probably a little bit higher given we have the 26th of September. You can find also other interesting statistics here for Maple Finance. For example, the utilization rate of the individual assets, the current Syrup staking APIs, and lots more. Let's get to the valuation part. I calculated here with a Syrup price of roughly 45 cents and a fully diluted market cap of $576 million. As we have seen in September, the monthly revenue rate was 1.4 million, which translates into a $16.8 million annualized revenue. So we already have gotten over the lowest revenue point here. If we were at 50 million annualized revenue rate, the multiple at 45 cents and a 576 million valuation would be 38.4 price to revenue. On the right hand side, I calculated potential buyback percentages, because as revenue numbers increase, likely will also be the percentage with which the Syrup token will be bought back. I wouldn't put too much emphasis on this number right now, because the most important thing is to grow revenue first and let the business itself grow. You can really calculate for yourself here what the most likely scenario is. If the revenue has been growing exponentially over the last couple of months, probably this rate of growth will slow down a little bit. But I think a $25 to $30 million annualized revenue rate is definitely in reach here. All right, for the next slide, I calculated the return on investment for token buybacks. And this, you can think about this, if you were to invest at the current prices at 45 cents and you assume a staking rate of the Syrup token at 50%, the current staking rate is actually slightly under 40%, but I calculated here with conservative numbers. Then you would get this percentage back on your capital every year just through the token buybacks. And because we already are over 15 million, it is probably not wise to calculate with this number. So you can pick your number here and assume, for example, end of the year price target, and then say, oh, Maple stakers or Syrup stakers are going to decide that the percentage that goes to buyback increases by 5%, which has already happened in the past. And then you're at a 3.13% return on investment just through the token buybacks that you invested into the Syrup token. So let's get to one of the most important factors here. What is the growth story? Why should I buy the Syrup token today? Why should Maple Finance grow in the future to even higher revenue numbers? First, very obvious market is the borrow demand for crypto blue chip assets. And I calculated a hypothetical scenario here for the next 1 to 2 years, just to give you a rough estimate of where Maple revenue could go to. Let's say 10% of all Bitcoin will have borrow demand. 20% of all ETH will have borrow demand and 20% of SOL. At current market caps, this would add up to a total of roughly $300 billion borrow demand just for the three crypto blue chip assets. 50%, I assume that 50% of that will be facilitated through centralized finance lending, which is currently not the case. So if you want to calculate slightly more conservative, you're welcome to, because at the moment, a little bit more, I think 60 to 65% of all loans are actually facilitated through DeFi for crypto blue chips asset and not over CeFi. But because of the trend of traditional finance acquiring a lot of these crypto blue chip assets like digital asset treasuries and so on, I assumed here the market share for centralized finance will go back to 50% and 10% will be facilitated through Maple Finance, which is a 10% market share, at an LTV rate, which is currently in Maple Finance at 37.5%. The borrow demand would go up to 5.55 billion. And with a take rate of 1%, which is the current take rate, the revenue would go up to $55.5 million. But in my opinion, that tells only half of the story, because we just looked at crypto blue chip assets and specifically only at Bitcoin, Ethereum, and Solana. There are lots of other crypto assets which will have a high borrow demand as well. And there will be real world assets. Gold is increasingly tokenized and put onto the blockchain. Stocks are increasingly tokenized and put onto the blockchain, and so are treasury bills. So I could see a scenario, because gold, stocks, and treasury bills are in market cap in total worth way more than these blue chip crypto assets, that Maple Finance is going to, in the future, that half of Maple's revenue will come from tokenized gold, stocks, and treasury, or borrows against gold, stocks, and treasury bills. And therefore, the Maple fee revenue would go to 110, 111 million. So that is the potential growth story. The timeline, obviously, it is really hard to say. The market is really cyclical, but I think it's very possible over the next 1 to 2 years. And why do I think that Maple Finance can reach a 10% market share in the centralized finance lending? First of all, the team is really experienced and actually worked in investment banking before, did exactly structure these kind of products, these borrow structures for traditional finance assets. So they have a lot of experience and are also very experienced in the crypto space already, because they started their protocol in 2021 and survived the centralized lending collapse of FTX, Celsius, BlockFi, and so on. Because of this, they already have an established brand and are trusted by the industry. And there is no career risk anymore. Lend against or borrow against your blue chip assets on Maple Finance. Then they have economies of scale. If you're an established TradFi player, you want to take a big loan against your crypto assets, there are not that many places that can facilitate this loan. But because Maple was able to sit exactly between the elegant niche between decentralized finance and centralized finance, they can still offer a counterparty to the institutional borrower and at the same time get the liquidity from all the DeFi players. So this has gotten them a lot of USDC and USDT that can be lent out to these institutions. And their product is DeFi composable, which means they have short withdrawal times and they're integrated with a lot of other crypto products. For example, Pendle, where you can actually fix your yield at a certain percent or lend against your positions on other crypto lending markets like Spark and Morpho. And this is really a good niche to sit in, because centralized finance players are probably never going to turn themselves into decentralized players, and decentralized protocols never will become established traditional finance institutions. So Maple has really carved out an elegant niche here to serve their institutional customers with a trusted counterparty. Of course, there are always risks to an investment. First of all, if crypto assets were to go to zero real quick and Maple Finance is not or will not be able to liquidate their positions fast enough, they will end up with bad debt that has to be paid either with treasury funds or with future revenue, and the trust of the protocol will of course suffer as well. Then there is always the smart contract hack risk. Maple Finance smart contracts have been live since 2021, have been audited several times and are tested in emergency scenarios, but you can never be 100% sure that the protocol will not be hacked. And the competition, innovation, disruption risk, of course, there will always be competitors to outcompete Maple Finance at certain levels. I will talk about other lending market models in my future videos, so stay tuned for that. But always keep in mind, there's always a competitor out there who might have an edge. So what are my conclusions here? In this tweet here, we can see Sid Powell, who is the CEO and co-founder of Maple Finance. He's celebrating the end of Q2, which saw a $2.6 billion asset under management and a 50 million annualized revenue rate. And he said the updated target for the end of the year is 5 billion assets under management with a 30 million annualized revenue rate. Given it is September now and they're already at 4 billion assets under management, I think this looks really promising. If we look at the price to revenue multiples, a revenue of $30 million annualized would put Maple Finance at a 19.2 price to revenue rate, which in a market environment which will be a little bit more heated towards the end of the year, which I'll assume is too low of a multiple. I'll actually assume the same multiple that Maple Finance has right now, which is roughly at 38, but with a $30 million annualized revenue rate, which would put Maple Finance at double the price it is right now. So if you buy at 45 cents, I would assume it goes between 80 cents and $1 in a price. That would be my end of the year target, because I think the market is really cyclical, and at some point in 2026 we'll see a bear market. It would make sense to take some profits there. Most likely, I'm not a financial advisor, so everyone has to make their own decisions. But I think Maple Finance is a really solid bet from here. If you want to have a solid token that is backed up with revenue, that has already figured out their tokenomics through token buyback and redistribution model. Because of this solid business model, the token is already priced pretty accurately. It will give you the security that the token won't go to zero tomorrow, given that none of the risks are actually come to fruition, but also it won't be a 20x from here, because the price tracks more or less the fundamentals of the business, and the market could be overheated a little bit, and Maple Finance could beat their revenue expectations by a little bit, but that would put the price only up a little bit so higher, so maybe $1.20, but really solid investment in my opinion. If you're looking for a nice diversification play with fundamental investment value, Syrup is definitely a protocol, a token to look at, and Maple Finance a good choice to park some of your stable coins. Thanks so much for watching, guys. See you in the next video. Bye bye.